Hello, I'm Greg Hunter. Welcome to USAWatchdog.com. We have with us Fabian Calvo. Of course, he runs the NoteHouse.us. His company handles $100 million in distressed real estate. Fabian Calvo, thank you for joining us today on USAWatchdog.com.
Greg Hunter, thanks for having me back. I appreciate it.
Well, I'll tell you, I've been watching your latest round of videos, and, I'm going to paraphrase, but you're pointing out that there's only a couple of assets to own. They're the tangible gold, silver, diamonds, artwork, whatever, and real estate and farmland on the other. Just all tangible assets for what's coming. But what you're basically talking about here lately, and you haven't revealed this yet, is basically what you have figured out. Because you are on the front lines of the real estate market in a big way in a lot of markets across the country, because you deal with distressed debt all across the country, so you pretty much have a handle in most of the big markets. And your premise is what's going on is a pump and dump, and right now we're getting the pump. Explain that for us.
Yeah, there's no question about it. I mean, let's talk about the rush into hard assets. I mean, not just gold, but real estate. I mean, in the last couple of years, in the last 2 years, there's been close to $5 billion of distressed real estate purchased. They're estimating in the next couple of years, it's going to be $8 to $10 billion more. And I think it's all these hedge funds, big money investors, many markets, 50% to 70% of all sales are big money investors or cash investors. They all realize we're in an inflationary period of time. And I also think that they know the Fed's 0% interest rate policies are going to continue to fuel this housing bubble. And so that's the pump stage here, Greg. The dump stage will come, and you're beginning to see some of the signs of it when the federal government begins to roll out 0% no money down loans. As a matter of fact, for credit-worthy borrowers, 0% no money down loans are up close to 20%. And the no money down loans for subprime, I mean, look at Fannie Mae or FHA, over $1 trillion in subprime debt. They've become the new Countrywide.
So in other words, they're just using Fannie and Freddie as another repository for toxic junk. The bankers sell the notes, they sell the stuff, they make their fees and commissions, and they dump them right into Fannie and Freddie.
There's no question about it. So what you're seeing right now is you're seeing all the stops being pulled out, whether it's Bernanke at the Fed, whether it is the Fannie and Freddie and other government agencies, and then the big banking cartels coming together to try to get this market. They think they're trying to get the market to recover. The truth is, investors are leading the recovery. There's still trillions of dollars of toxic debt, but they realize that there will be no real economic recovery unless there's a housing recovery. So instead of allowing the free market to work, they're trying to manipulate it up, thinking that that's going to work out. Unfortunately, Greg, a lot of people will get suckered into this. They'll believe the hype. They'll get caught up in the euphoria. And, I expect the market to see another repeat of 2008 in the next 24 to 48 months.
So all this talk recently about, you've heard that, the Fed minutes are talking about, stopping the quantitative easing, which basically will allow interest rates to rise. And, the 0% interest rates for a key rate, the federal funds rate, it's 0 to 2.25% for all intents and purposes, it's 0. So the talk about allowing, stopping the QE, which will allow interest rates to rise, you say, no. That's no way. There's no way they're going to do that.
It's never going to happen. First off, the Bernanke buying MBS is not only happening in America. I believe it's happening in Europe as well, because remember, the banks in Europe have not been recapitalized. You have bad banks being created where they're pouring in all this toxic debt. Those people are getting their capital and getting financial support, I believe, from the Fed. We've already seen the Fed bailing out Europe in the past. So it's likely more than the 45 billion that's being created to buy the mortgage-backed securities. But if they were to stop that right now, you would have rates spike. You'd see the support for the market completely drop out, and we'd be back to where we were with asset values back in 07, or should I say 08, 09. So that will never happen. The bottom line is this: I think it's important for everybody to realize is that because of the toxic debt, that's not just in the trillion, but when you factor in the derivatives and the debt rehypothecation, it's literally in the quadrillions. You have a mad scramble for assets or hard assets globally. It's why you're seeing central banks buy gold, billionaires buy gold, but not just gold. Greg, you have billionaires, the largest sovereign wealth funds in the world, Norway, who has the largest sovereign wealth fund in the world, they're buying real estate like crazy. Carlos Slim, one of the wealthiest men in the world, has bought over 500 distressed properties in the last year. They're all focusing on real estate. That's why I think for educated investors, it's a great opportunity, but they have to be educated, because I'll tell you what, this is just the handwriting's on the wall. We're repeating another bubble, but this next one will be much, much bigger.
Oh, really? You think it'll be bigger than the last one?
Well, it'll be bigger than the last one because it's going to be, in my opinion, a collapse or a bursting of multi-bubbles, not just the housing bubble again, but the treasury bubble, the bond bubble that's being created in U.S. treasuries. That's going to blow. I think they will blow simultaneously. The bond bubble will take out this current real estate bubble. They will both go down together. And also you have a dollar bubble being created with all this artificial credit that Bernanke's creating. And
you're saying that 0% financing is back, baby, back in the housing market in a big way, compliments of basically taxpayers, Fannie and Freddie.
But that's exactly right. So, before you had the subprime loans that were being fueled by Countrywide or some of the other WAMU, those people are gone. So government's taken their place. And it's just what I've, talked about in my last micro documentary, Real Estate's Big Secret, House of Cards. And it's going to continue. I'm forecasting after the midterm election, Greg, you're going to see Barack Obama and Republicans and Democrats come out with no money down loans. They're going to say, hey, we need to do this to help the economy. Everybody should be able to buy a home. And they're going to redo it all over again. Why is that? Because the big banking cartel, or I should say the big hedge funds, the big private equity, they're buying all the real estate right now that the people that will be getting the no money down loans will be buying in the future. So when they start dumping, they're going to be dumping to those buyers that are getting money for free from the government. So it's really, if you think about it, it has all of the characteristics of a pump and dump scheme. That's how this works. And one of the characteristics of a pump and dump is the hype. And by all means, look at the media talking about a real estate recovery, pushing all these phony numbers. I mean, the hype is in. Everyone's in on this.
Now, what's the one thing that could break this up? What could be the black swan that could these guys get a pie in the face? And the reason why I say this is because they want real estate to go up in price, and it should be taken off like a rocket. I mean, 3.5%, mortgage rates, basically. It ought to be taken off to the moon, but it's up a little. I mean, it's still off 30-40% from its highs, according to John Williams. I'm sure you know the same thing. It's not really, some places are up, but man, they've been way, 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 way down. They're up 20 or 30%, but they're down, they're cutting half from there, so they really have to have a 100% increase from where they are. So this isn't really taking off like they want, and you're saying they're gonna step it up. They're gonna pour some gas onto the fire.
They will be stepping it up, no question. I mean, right now, again, to stress that what's driving this market is investors, period. And when I say investors, I'm not just talking about the mom and pop that maybe have $100,000 to buy a little fixer-upper and rent it out. I'm talking big private equity, big hedge funds, some of the biggest sovereign wealth funds of the world, and big billionaires of the world are all moving into real estate rapidly. Again, this is the rush for hard assets that's underway. What could blow this all up? You mentioned the black swan. I mean, a currency crisis, in my opinion, will eventually come with the dollar. That would completely blow this up. Some kind of big war or some other kind of calamity event as well would blow it up. But I think it's more so going to be that you're going to continue to see countries around the world continue to have a loss of confidence in the U.S. dollar. You saw most recently China and Australia now engaging in direct trade and ditching the dollar. That puts more stress on Bernanke having to print even more money because that's less demand for dollars that was just created. This is a going trend. It's a trend that goes against Bernanke and against the Fed. It's not going to get any better. So I think those are some of the events that could completely just, set this off the rails.
And you have a new video out to help investors who, want to take a risk. And there's risk to investing. And what's your video about? What's your video?
Well, I mean, I think that whether it's people that are investing in gold or people that are investing in farmland, I think there's opportunity out there in this market. I mean, I'm on the front lines of that opportunity all the time. The most important thing, though, is that you have to get educated about it. So I created a program, resourcefulrealestateacademy.com, educates investors if they want to know how to take advantage of this opportunity. But I mean, if you don't have the education, quite frankly, and you're new to this, you're going to repeat what you saw in '08 where people lost their shirts. And the truth is, a majority of investors, whether it's stocks, whether it's commodities, whether it's real estate, usually end up losing money because they don't know the driving factors of the real estate market. And so understanding those driving markets, understanding how the real estate market has fundamentally changed from 20th century to now is absolutely critical, I think, for any real estate investor to survive and to be able to prosper in this time.
Even if you're just going to go out and buy a personal residence. Even if you're just going to go out and buy just one house, just for you.
That's exactly right, Greg. I mean, people that are looking to buy their own home, I mean, take advantage of these zero interest rates. I mean, if I'm going to live at a home for the next 25 years, I really don't care if prices go down or they go up or what's going to happen, At least that's me. That's my opinion. So yeah, I mean, look, understanding the fundamentals about the real estate market is critical, whether you're a first-time home buyer, whether you're an investor, whether you want to get into this market and get some rental properties or whatever. I see the big money making huge moves into real estate. It's a total trend where it's a rush for hard assets, and I think it presents a good opportunity for anybody to get involved.
So if somebody buys your program, and they say, this is not for me, you'll give them their money back, right? Yeah,
it's a 30-day money-back guarantee.
Okay.
Again, resourcefulrealestateacademy.com. And look, you have Doug Casey, you have, some of these other downturn millionaires that have created programs to help people do the same thing. I'm doing it for real estate. It's really no different. If people aren't happy with it, they can send it back, no questions asked, they get all their money back. But I think I want to just stress that in this time right now, Greg, and I say this to to people in my newsletter all the time, I don't care if people invest in real estate. I don't care what. But people need to learn some kind of skill that's going to take them out of the rat race or the old economic paradigm of trading your time for money. Because I think people that continue to do that, they're the ones, the middle class, the lower middle class, they're the ones that are going to get devastated in this next downturn or when this next currency crisis takes place. So I think we have some time between now and then to learn a new skill. Again, I don't care if it's real estate, but real estate's an easy one to learn, so that you can begin to prosper and have more options, let's say, when those challenging times come ahead.
Fabian Calvo, thenotehouse.us. Fabian Calvo, thanks for being on USAWatchdog.com.
Thanks a lot, Greg. I appreciate it.